The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento. My pleasure to be here. Larry will be back tomorrow. He's just taking a break, and we're looking forward to that. We've missed him a lot. Key sessions around here. So let's go to the nitty-gritties. The Dow's down 13 at the S&P E-minis down 13.50 at 2,043. Look at this chart here. Made a peak D top in the Chapman wave methodology. That was on the 20th at 2105.25. Now trading at 2043. And we're in leg C to the downside. I have a time price cycle that says that 2026 should be hit by the 12th of this month. But the 120-minute chart, let me show you this right now. And I do want to thank John Logan. Great show that he has starting us off every morning at 8 o'clock. Really terrific with these TAS profiles. And with that said, let me just go to this 120-minute chart of the E-mini. See this large arch formation? You see that within it, there was a little mini left side, right side price time match with a plumb line right at that peak D top of 2105.25. Then it extended to the right, going sideways between 2071 and 2094. Peak D, another peak D, first peak D, second peak D. And that fourth highest peak saw a very sharp move down to the 2045 level. Then from that was at exactly 4 o'clock on the 29th. And then what happened is over the weekend, on Sunday night, we saw a bit of a bounce, saw a rally. That rally went to 2077.50 at 4 o'clock on the 2nd. And then we started down. You see this coral-colored moving average right here, the 200-period exponential moving average. I tend to use exponential moving averages. They just seem to fit my work better. There is no best or worst. It's what you think is suitable. My advice always with moving averages or any of your techniques is just be very consistent. Make sure that you use the same thing over and over, because if you're going to change it, your template has moved. You've got Jello. You don't have anything fixed. So in this particular instance, I had drawn yesterday from my subscribers to my opening call an arch formation. We've been short via the Dow for quite some time, just before the top at that peak D level. And we've added to that. What we're looking at is this support that was made early this morning at 2041 at 6 o'clock this morning, and then again tested at 8 o'clock with 2040.75, just a fraction lower. And that made a trough E, but it should really be a trough E/B. I didn't want to get too carried away. The stochastic is at 14%. Underneath this 20% line is where it is in oversold condition. When it goes above 80, it's called overbought. That's the technical term. I happen to love those, because when the price of whatever it is that you're following is above 80% in the stochastic, slow stochastic, the longer it stays above 80%, the greater you have a chance of going higher and higher and higher. So I don't know why it should be called overbought. It is in an area that is very strong support. If that breaks, then you can say it was overbought and it's coming back down. But it's just interesting that terminology in all the books will say overbought and oversold, with the implication that it's bad. I just say that in this case, it's oversold, and it can remain oversold at 14%. It can go down to the single digits, but it's real close to some kind of a bounce. Just have to be aware of that. And that black line there is the 9-period exponential moving average. I use the plumb line right there. That's the low of at 2 o'clock on the 22nd. Now, the best always is if you can use, like we did here, you can use the exact high or exact low to say we're going to have a time price match. But wait a minute, there's something else going on. This pattern right here, remember we spoke about this inverse head and shoulders pattern, which could be very bullish if you broke this downtrend line, which we did. Now what we're looking at is a series of lower lows and lower highs. And I'll go into that right now. What I did want to show you, I wonder if I'm going to make a mistake. Yeah, I did. Okay, we're going to get this tucked away right there. That's the, okay, most importantly, I want to show you what we're using as a template for my subscribers. See this chart? It's a very simple chart. Half close your eyes and just look at that red line. And you see how the price has basically made an oscillation, a yo-yo pattern with slightly lower highs and lower lows until it really plunged down in August. And this is from the May 20th of last year, a year ago, 18,351 high. It's so fascinating that just a year ago we were at 18,351. And in all this time, just the other day we hit, on the 20th of April, we hit 18,167. That is a huge consolidation. I'm looking at it positively, even though we're in sell modes on the daily. We haven't yet made a sell mode in the weekly chart. Now, what's really important about this is that the market made a high, the Dow made a high. And it's funny, I'm using the Dow. Larry hardly ever looks at the Dow. He looks at the New York Stock Exchange, looks at the S&P. And rightly so, because there are many more stocks. There are only 30 in the Dow. I happen to, for the first time, since I think back in 1984, 85, 86, this is the first time in years, decades, where I'm really satisfied with the price, with the choice of stocks within the Dow. The mix is closer to the XMI, which I've always used as a benchmark. It's not even spoken about anymore, but it used to be a fantastic trading vehicle like the OEX 100. So the XMI, which is the major market index, has in fact got a slightly different price movement. Its high was in December of 2014 at 1920. Let me just double check here just to make sure. Yes, at 1920, and its most recent high was at 1885. So that's quite a bit away. It's not like the Dow, which made, look at the chart on the right, that's the monthly. Now look at the Dow IND, it's a little more crowded, but you'll see, look how close we got to the all-time high. To me, that is a bullish sign at this particular point. Now, a couple of things I want to look at just to show you that the template we're using had a left side, right side price time match. There I used the exact midpoint, the high of the 3rd of November, where the market had already gone down from the May high of last year to the August low of 15,370, and then spiraled back and made a peak F top in the Chapman wave at 17,977. And look what happened. You see that move down from that peak F right there in the Dow back in May of 2015, how the price went under that big red 20 moving average line, and then it bounced back, and then it kept using that line, and you oscillated between slightly high highs and much lower lows. Well, look what happened back here in November before the breakdown, going into that huge move down in January, and now we're matching. So I'll talk about the match. I'll talk about gold and the dollar straight after this break. Basil Chapman sitting in for the one and only Larry Pesavento.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento. Larry will be back tomorrow, and he's interviewing Norm Winsky. It should be a wonderful show. So this is what I wanted to show you. There's a left side, right side price time match with the plumb line, that vertical line that makes the midpoint right there at the peak F top, the sixth highest peak in the Chapman wave methodology at 17,977 on November the 3rd. Now what I want to do is show you is you see the choppiness around this 20-period moving average. You see it right there. It's bigger. The moves that we've had so far are small, very much like the top that was made back in May of last year, not like the one that formed in November that saw that very choppy move down immediately. Instead, what we've done is we've used 1, 2, 3, 4, 5, 6, 7, 8 candles. And if you go to 8 candles, 1, 2, 3, 4, 5, 6, 7, that will take you to about here in the November move down and take you to about here in the January the 6th move down of 2015. How can that be January? I mean, the June the 6th, I was supposed to say, June the 6th. So this is a pattern that's matching. And there are a couple of differences that I want to talk about. One is that we should expect, we did have a Chapman wave trend gauge reading yesterday, a high reading, and that says within 2 days you should have a very sharp move to the upside, 9 to 11 points in the E-minis, which actually occurred almost immediately after that happened in the early morning. So we might have used it up. We could still see a bounce today, and that's the reason why it's so important. I didn't want to add to any shorts this morning because we're already short. I want to see if there's a bounce to the upside, and if there is in the Dow, then somewhere 17,827, about 70 points higher, starts a move that takes you to the 20-period exponential moving average. You can go a little bit above. So I'm anticipating a choppy move down. It's this extension right here, the one that really takes you down that you saw back in December the 29th, and then when you were at the price on the 18th of August of last year. I'm thinking that we probably won't get something quite as deep as that. That's what I'm thinking right now. But I'm prepared for the worst case, that's all. Now, it's really important to look at other things. So if you're looking at the dollar index, and I'm sorry, Mark, I had a couple of emails I'd mentioned in my opening call that I would be showing the the gold chart and the dollar chart with an analysis. And for some reason, I got so busy, I just completely forgot about to do the dollar chart. I just sent one to the site. It's very simple. I'll try to elaborate a little later in the day. Meantime, what we're looking at here in the dollar chart is that the dollar did make 91.92 a price move to the downside that took out, in the weekly, it took out the 92.62 low, 92.61 low of the 28th of, no, it was 62. The week of August the 28th. So let me get rid of that one. I didn't write that correctly. And that means that that arch formation has this Friday to next Friday in which to close decisively above 92.62. If it does that, there could be a rally since it's gone below. It limits the upside, but it says there could be a rally to the 94.67 level that's the 9-period moving average in the weekly chart, or the next peak higher. Well, the next peak higher is at 95.20, and then above that is 96.40. So that's the best case scenario. There's another case which I spoke of yesterday, and I drew it in and I said, there's a pattern that I look at, which is called the W. You know, W is formed by two U's put together. Took me a long time to figure that one out, W. And what we're looking at here, it's a pattern we've seen before, not many times, especially in monthly charts. And this U next to that peak C, which went just 12 cents above the high of March of last year at 100.39, says that if you make another U-shaped pattern, how in this case, how the dollar index rallies above 95.51 is going to be imperative in saying that it's going to break out to a leg D in the monthly chart, and how it fails and takes out the most recent low, and there's nothing on the left side. So I can just approximate, and I can say if the dollar breaks below 91 at any point in the next 3-4 weeks, that's going to signal a move possibly down all the way to 88. That's the 200-period exponential moving average. Meanwhile, the candle that's formed on the weekly chart has only had 2 days. And today the dollar is trading at 93.06 at this particular point. And that's good. It had an intraday high, or so far today, is 93.27. The stochastic did turn up. The MACD turned up. The histogram, the little vertical line in there, that on this is the daily chart, is important to look at. But most importantly, what we're looking at is you made a peak C with quite a big drop, but the MACD is still good and the stochastic's at 86. There should be a leg D. Now, I set up for my subscribers, I almost went long the dollar this morning, almost went short, but now look at this. Let me go to the only thing that was a hesitation for me, and I figured, hey, even if there's a big move, either way, I could still do it tomorrow because it'll be a trend change. But what I was really looking at is that the dollar pulled back sharply from that peak E, the high of 13.06 in the continuous contract on the 2nd of May. It has not plunged under 1273, the 9-period exponential moving average. The MACD is still quite good. Stochastic's at 85%. And that's saying, see, the way I'm looking at this is on a purely technical level, I haven't quite got the information yet to say go short or even just to step away. So I've raised the stops in our positions that have gold. They've done quite nicely. And I've raised the stop. And what that says to me is that the market is going to tell me, and let me just tell you my thinking right now. The XLF, which is the financials, kind of has the same move down, and I've got it from a C. I don't know how else to call it. If you go to some of the Goldman Sachs or any of the others, they've made the right letter to be coming down here. Goldman Sachs made a possible peak F top. But if the financials start to break down exactly from now, today, into tomorrow, into Friday, that's going to suggest to me that the reason why gold is moving higher is that some people are anticipating a harrowing time in the financials over the coming weeks. Well, what does that do? It leaves you open to say, maybe gold will be the safety. And it's been that way all the way since it made the low below 1050. Maybe gold is the harbinger of safety. Because if you look at the TLT, it's stuck in a range, but it did not spiral up to make that leg D in the weekly. And that says this could take even longer to consolidate sideways. I don't think the Fed's in a position right now to actually raise rates, but the market might do a little bit for them. So the TLT could start to drop again, but it did have a nice spike yesterday. So the TLT is, I call gold the harbinger of fear. It's a currency trade. And I call the TLT the so-called safety. I call so-called because you're only being safe by keeping your capital at this particular point safe. But interest rate-wise, you're getting nothing. I'll talk about that when we get back. So Basil Chapman sitting in for the one and only Larry Pesavento. Be right back after these messages. S&P futures down 12. Dow futures down 88. Be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and Basil Chapman sitting in for Larry Pesavento. So let's get right to the nitty-gritties. Let me get rid of this. And what we're looking at is the HUI, which is the ARCA Gold Bugs Index, has made a peak E, a little vertical move that went right up, and we'll see where it opens today. It's opening at down 5 at 216. So that could be an island reversal. All right, so let's just look at that, with a high of 219.39 and a low of 219.56. Yep, there's a little island reversal. So maybe that's Maybe that was the case to actually short gold right there. We'll see. And you're looking at the XAU, which is the XAU. That is the Philadelphia Gold and Silver Index. And it is also down. It's down 1.35 at 85.95, making a peak E yesterday at 93.66. Oh, that's quite a move down, but it's had a huge move up. So this could certainly just turn into a consolidation for gold. But here's the issue. The GDX, which has made an island reversal, and that is the market vectors gold minus ETF, is in leg C to the upside. And that's one of the reasons why I'm saying to myself, yeah, we could have a pull. We could deserve a pullback in gold. It's been spectacular. But it might be a high-level consolidation. And there's a big difference between wanting to short because it's a top of significance. And let me just go to this for a moment. XAU is a C as well. Let me go to the gold contract because that's further along. That is an E, the gold contract itself. But gold is only down 490 right now, holding very nicely. And the dollar, you'll see, this is very interesting. Look, the dollar has a nice candle, fabulous candle yesterday, nice turnaround. Yeah, I would have preferred if it actually engulfed the previous day, but that's okay because 91.92 was the low. It's really what happens on Friday that it's going to be very important because of that analysis based on the Chapman wave methodology of the arch formation, testing the left side low. You have two bars, whether it's a 1 minute chart or whether it's a weekly or a monthly chart. You have two bars in which to close decisively above, preferably without breaking it. But if you break it, you don't want to close below it. And if you do close below it, you can maybe do it for one bar. The very next bar is to get back. So a couple of questions. Mike in the den wants to know about Valet. Whoops, why did that happen? Oh, that's ale. Let me write that down. Letting. You know, serendipity plays a big part in looking for charts as well. And this is serendipity. Look at, why did it change like that in the weekly chart? What on earth happened? Uh-oh. Ale. I'm just putting it down here just as a note with a question mark. ALE. Now let's do this again. Oh, I hope I haven't made a mistake here about doing something silly. Yes, I did do something silly. How did that happen? Is this the right weekly chart? Good grief. If you don't mind, I'm just closing out. I'm not saving anything. Don't save. I need to do this. Don't save, don't save, don't save. Close workspace, no to all, and I'm coming right back. So I just hope there wasn't a mess there. I have no idea what happened. Let me go back to this one here. Please come back the way you're supposed to. We are also so married to these chart, the desktop, whatever it is that you're using, whatever platform. Let's hope there's no problem. Here it comes. 1, 2, 3. Oh, it's back again. Gosh, I have no idea what happened there. So I hit the wrong. Oh, that's what I did. I must get rid of this. I didn't want it there in the first place. Okay, excuse me, everyone. We're back. And let me think about what was I doing? I typed in XLE. No. AL. I hit ALE, and that was a mistake. Serendipity, I said. Okay, I wanted to look at, first of all, I want to go back to the dollar chart. So the dollar is at 93.12. It's up 17 cents. And I wanted to go back to gold, and gold is down 440. All right, so far so good. We'll see what happens. Now, all right, let's get to the nitty-gritties. I'm going to run all the indices just the way I do in my show, which is usually at 11, well, it always is, at 11 o'clock, Tiger Technicians Hour. You see this chart with the Dow down 84. You see that black line, the 9-period exponential moving average. Here I don't have, I haven't got the, excuse me, I've got a 21-period moving average for a different reason. That's that little light line there. You can see it. You can just barely see it. But the reason is, this was a study I did, something completely different, something very new. This one here. And I just loved what the information was given me. And I used it only as a kind of an example and a template. I never used it publicly. I brought it to light recently, and I love what it's doing for us. In the meantime, back at the ranch, I have to just move this over here. Now, the Dow weekly has gone to a peak C. It made a W formation. And this W formation says that there's going to be something wrong if the Dow closes below 17,000, around about 17,000, let's call it 550, and then starts to trade for a little while in the area between 17,500 and 17,300, or even 200, because it makes that W pattern, it starts to fail on that right arm to the upside. Something else is going to have to happen. So this is really important. And what we've got now in the Dow is a leg C to the downside, because we took out the 17,651 low from 4 days ago. So now you see the MACD and stochastic are very poor. The weekly chart, MACD hasn't even budged. It's just kind of flattened out. The stochastic is still at 90%. There, unless the Dow daily chart and the S&P and the Qs, unless their daily charts really smash below like the 200-period moving average of 17,261 in the Dow's case, in the S&P, which is SPX down, SPX is down 12, also in leg C to the downside. See the lower case, there's your peak D, down arrow because it's in a sell mode right there from the 2111.05 high of the 20th of April. And now look, trough A, call them troughs on the downside with the lower cases, peaks on the upside. That's how simple it is. And you get to a peak D, you got to be careful. And we're only at a B with a 16% gain in the weekly chart. So there could be a pullback here. It could even be a pullback without changing too much to the to this trend line, 2025 level. That's about 200 to 300 points down in the Dow. So all I'm saying is that the monthly charts are still extremely positive in the Dow and the S&P. When you get to something, and I'll do this because Larry likes to talk about it, so the New York Stock Exchange, you can see this monthly chart is way weaker than the Dow or the S&P. We've made a peak D already, so it's already more advanced in its move to the weekly chart, fourth highest peak. But the stochastic still at 92%. The daily is now only in leg B down, right there, because it extended by a couple of days. And now what we're looking at is the stochastics at 52%. I don't think we're going to get a turn to the upside until the stochastic, in some of these cases, reaches somewhere in the 40% area of the S&P. We'll talk about that when I get back. Basil Chapman sitting in for Larry Pesavento. Be right back. Dow's down 112. S&P's down 12.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks. We're back. So the Dow's down 127 at 17,623. The S&P is down 14 at 2,049. The Comp Index is down 31 at 47.31. The VIX Index is at 16.47. That is selling pressure. And as long as it holds in the 16s, you're going to see that selling pressure be maintained. Goes to the 17s, and you'll see the triple-digit down move in the Dow increase. So what you need to see if you're a bull, you want to see this slide, the VIX index slide under 16, go to the 15.90s, and you want to see the Dow bounce at least 60 to 70 points higher. Then you want to see the S&P go 7 to 9 points higher. We'll see what happens. Okay, if you're looking at the crude oil, and if you're looking at the S&P, this is today the vertical line. This is the ARCA 206. This is the crude oil. This is a USO. So it's not exactly, it doesn't trade exactly the same. It's very close. My USO gave a nice reading the other day. So this is rallying a little bit, but the at 10.99, up 25 cents. But the S&P is down at 204.79. Here's a divergence. We'll see which one is going to drag the other one towards it and to regress to the mean. Okay, let's get out of that. What we're looking at here is the TLT bonds. So the TLT is up 30.36 at 129.79. So far, it's holding very nicely. It held that left side, right side price. Time actually went to a peak G, unusual, right there at 132.99 on the 7th of April, pulled all the way back to 127.12. And we'll see what happens here. The bonds themselves, US, this is the bonds, are up for 30 seconds at 163.31, 30 seconds. This is leg B. If bonds go over 165, that's saying be real careful here in the stock market. Okay, this is now we're going to get back to gold. Gold at this particular time is down just $2. I might be a little bit behind, but the GLD has turned around. The GLD has gone from, it's now up 16 cents at 123.12. You'll understand what I'm talking about just in a moment. When I say that I didn't want to short gold, didn't want to exit our gold positions, I wanted it to take me out because I'd rather have the stop be taken out. And if it rallies, I'm in the trade still, then be taken out at the low and then see it rally. And if I'm taken out, then it says, hey, it's going down even further. So this is the way I've got it. And I'm still thinking high-level consolidation at this particular point. And here's my reasoning. You see that silver made that peak E, but it's above the 9-period exponential moving average. The MACD hasn't crossed negative. I can't put a down arrow. And the stochastic still at 81%. And this is still leg D in the weekly chart. They could turn around. The commodities absolutely deserve. Look at this. TRCCI, I always go to this. This is the Reuters equal weight commodity index. Actually, the real title is Thomson. Some of you remember Thomson, Reuters. Thomson was taken over by Reuters. Thomson took over Reuters. No, I think it was Reuters. Yeah, I think Reuters took over Thompson. And what happened was both in news-oriented and also market-oriented. So Reuters Equal Weighted Commodity Index has had a spectacular move up in the monthly chart. First time it's had that since back 2013-14, and then nothing through the rest of 14 as it plummeted down from the all-time high was 690. It traded just recently in January down to 351. So that monthly chart is just giving me a hint of things that are going on. But the weekly chart says, look, commodities have made a leg C to 409.67 week of the 29th of April. 409, 67, week of the 29th. And so far this week, we are 5 cents away from that high. We have made a peak D in the daily chart, but it's holding beautifully. And if it includes soy, and look, soy had a spectacular move. It's made a peak E. It's now consolidating a little bit. Great leg C up in a cup formation in the weekly chart. Look at that, broke above it, hasn't closed above it. It has natural gas. So let's go to NG. NG, holding quite nicely after that peak D in the daily. You've got a peak C possibly this week in the weekly, and it's not a great chart, but it is holding. You've got gold. Let's see where gold is right now. Now it's only down $1.70. Now you can see why I didn't want to get too carried away. We got in beautifully for these positions, some of them. I don't want to spoil that. So as it stands right now, gold is acting quite well, and the commodities generally are acting quite nicely. It even has sugar. Let me see if I can get my SB up here. SB sugar is, whoa, leg A, leg B, leg B, leg C, leg D. Yeah, it's still acting very well, and it's trying to test the recent high. So yeah, commodities are holding well. So that's the reason why, and that's the reason why the dollar index to me was important, but there were other things I think that were a little bit more important. I'm going to Mark in Denver. Mark, how are you?
Good. How are you, Basil?
I'm well, thank you.
Good. Thanks for doing the dollar. Appreciate that.
Yeah, pleasure.
Hey, what do you think about the IYR? I've been playing it to the short side a little bit, but it's showing some pretty decent strength, and I wondered what your thoughts are.
You know, I looked at this last night, and I just went through my IYs and the IYT and etc. And I'm running in, I bump into the IYR, and I look at it and I say, you know, it made a peak G, an unusual peak G top on the 19th of April. It did have the plunge to the bottom in 2 days, and then it stopped dead and started to do what I call that rectangle formation. And as I'm looking at it, I'm saying, you know, I don't know whether I would go long, I'd go short. I'd probably just step aside for one more day because the weekly chart is still showing strength. Look at the 9-period moving, if you can see my charts. Folks, this is the IYR, trading at 77.32, down 9 cents. It was down deeper this morning. It hit a low of 76.89, so it's up 70 cents from that. This includes SPG, AMT, CCI, PCA, EQR, Boston Properties, SPG is Simon Properties, AMT is the American Tower. You know, we're looking at PCA. This is a storage company. It's all over the show, and it's holding very nicely. So the question you have is pertaining to the market and the IYR is showing strength, or is it a particular trade that you're looking for?
Oh, well, I'm in a few puts, and I'm pretty much break even right now, and I was thinking I was going to get a little bit more of a pop down on this. I was kind of looking at I was looking at the two lows from the 21st and from the 29th, which had pretty decent volume to the downside. I was thinking I was going to get one more move down, maybe to the low 76s, but I'm starting to doubt it a little bit. So
let me just do this. You're in the put position, and the puts go out to July or what?
They're just out a couple of weeks to the 20th.
Oh, you're this month. That's there's a big difference. Let me explain what I'm looking at. There's a jobs report on Friday. There are discussions whether or not the Fed, because the jobs report might be strong, and sometimes that's the tail wagging the dog, you never know. Can you hold on, Mark? And I just wanted to give you the ideas that I have. It might help you. Are you able? Okay, I'll be back with Mark in Denver. We're looking at the IYR. I'm going to talk about interest rates. I'll be right back. Basil Chapman sitting in for Larry Pesavento.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Just wanted to show this particular chart right now. This is the chart of the S&P 10 minutes, and it should be making a leg D as soon as it can break above 20.04775, goes to 20.048, starts a leg C. I think there will be a little bit of resistance at the 20.4925 level, and it could trade in this rectangle formation if there isn't a real kicker to get the market moving. Watch that VIX index, now only up 62 cents, and that would be the kicker. So let's go back to Mark. So, Mark, this is what I wanted to say to you. Because there's a jobs report coming out, and suddenly there could be this fear of the Fed wanting to raise rates again, I think that's kind of what the market might be anticipating. So when I look at the IYR, I'm saying this is invariably, not always, but I think that a majority of people look at it and say it's probably also a dividend play. It's not just that you're looking at the sector, the REITs, iShares, US REITs, ETF, mostly commercial buildings, all commercial buildings. It's the way it responds quite nicely to as a dividend stock. So that's really the issue here. And the only thing I would say to you is, if I might say to you, if it goes above 77, 77, 77.80, that resistance area, it's likely to try to test the recent high and make a leg C this week before Friday above 78.36. So I'm going to say to you that I would probably lighten up on the put position. If at the end of the day you start to see it as getting close to 77.80, you can always put them back on again. And the reason being, the way the weekly chart is held so well, it looks to me like it could very easily break to a leg C as a kind of a dividend play in a sense. But I might say that to you, and it could do that this week, and the next week, all of a sudden, you're looking at it at 76.50 because the interest rate whole factor changed. So I'm going to say, because you've got 3 weeks, if you were out to July, I'd say give it a time. I think you're going to be right. But in this particular instance, I'm just going to say, to protect your premium, I would be a little careful right now. I wouldn't let it get away to the upside. You can always reinstate those. Hope that helps you.
Yeah, thanks.
Thank you very much for calling. Folks, Basil Chapman sitting in for Larry Pesavento. I'll be back for my show at 11 o'clock. Stay tuned for Tom O'Brien. Tom O'Brien coming up with the update, and then Tom and Tommy together. And, of course, I will be back tomorrow for my...
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.